The Arizona housing market is changing so fast. Just earlier this year, we were in the hottest sellers market on record. Now in October, we're seeing a rapid cool down and price corrections across the board. But this cooler market is presenting some great opportunities if you know where to look. In the next 3 minutes, I'm going to quickly break down what's happening here, what the data says you should expect next, and how you can still play smart and win in this market. So stay tuned. Now I have to remind all of you that we're coming out of the hottest real estate market Arizona's ever seen. And now we're seeing a relatively mild market correction. It's not a crash. What this is a balanced market. At the most basic level, our real estate market works by supply and demand. Supply being number of homes for sale, and demand being number of buyers actively searching for homes to purchase. Now in this market, both supply and demand are relatively low. Rising interest rates have crushed demand, which is why we're seeing nearly 30% fewer home sales this year versus last year. However, people are still listing their homes for sale, which has resulted in an 88% increase in the supply of homes available just since April. So when you have supply rising and demand falling, what happens? Right, prices go down. We saw the average sales price drop 1.9% last month, and I'm predicting a 1.1% additional drop this month. Now again, this is a very soft correction, considering the average homeowner here in Arizona over the last 5 years has gained 97% appreciation in their home. This correction is still putting homeowners in a very good position. However, selling your home in this market is going to be harder than it has been for the last several years. You're going to have to actively, aggressively market your home. You'll have to price it to sell, which means using data to position the home as a good deal in this market instead of just seeing how much you can get. So let's talk numbers. Average home sales prices last month were $549,000. That's an 11.9% increase over last year. However, this is still actually a 7.5% decrease from May's high average sales price of $590K. Looking forward to the future, the Fed has come out and said there will be more interest rate hikes to bring down inflation. That means that homes will become less and less affordable to those using financing, even if prices keep going down. But experts predict that towards the middle of next year, we should start to see interest rates declining as inflation slows. And when that happens, demand will go back up, and that'll be the end of falling prices as well. Because remember, when demand rises, so does price. In the meantime, a lot of people who are pushed away from buying will now become renters. And with around 300 people moving to the valley every day, I predict rental prices will keep increasing modestly. My advice to win in this market would be as follows. First, invest in rental properties, okay? If you can, do it. Doesn't matter if it's a long-term rental or an Airbnb, landlords are winning right now. You can take advantage of this dip in prices to get yourself a great rental property. And yes, mortgage rates are high, but so are rents. Now you can have that tenant pay your mortgage for you and then some. So when rates go back down to normal, you can refinance and increase your cash flow while enjoying this long-term appreciation between now and then. For current homeowners, if you're thinking about selling, think about if you need to sell or if you can wait, because I do think the spring will bring higher demand and higher prices and make selling the home for top dollar easier than it is right now. Now, if you're buying your next place with cash, it's less of an issue because you're not really affected by rates as much. But demand for your house is. So another great option for home sellers in this market is to offer seller financing. Now, not everyone can offer this, maybe most can't. But if you do have the wherewithal to offer seller financing, you can offer buyers a lower rate than banks, positioning your property as a great value without sacrificing price. When you sell with owner financing and then report it as an installment sale, it allows you to realize that gain over several years as well. So instead of paying taxes on the capital gains all in that 1 year, now you pay a much smaller amount as you receive payments over time. As for me, I'm going to keep giving you market updates every single month so you always stay in the know. Thank you so much for your time. And if you like this video, please don't forget to like, follow, and subscribe so I know to keep making them for you. Thanks again. I'll see you next time.